It's Down to Business with Jack Miller. Forget what they teach you in school. This is real life, not Wall Street, but Main Street. A real show on what's really involved with starting and running a business with all the ups and downs. Our guests will answer your questions and provide you with valuable information. Stay tuned and join in the conversation.
When the earth was green.
Now we have a super guy on the phone. Can we patch Len in? Okay, Len, you there?
Jack Miller, how are you, young man?
Hey, my friend Len, thanks for joining us. Let me set it up, Len. Then I want to ask. Then we're going to jump into it. Len, if I get any of this wrong, tell me. First of all, I've never met Len in person, but from what I hear, he's a real stud, a charmer. Everyone loves this guy, and he's supposedly an unbelievably good-looking guy. My kind of guy. Len runs a program called Pitbull Seminars, which teaches people about private lending. How am I doing so far, Len? All right?
Pitbull Conference.
Pitbull
yes.
Conference. Len, why don't you give the website to it before we forget?
Website is pitbullconference.com.
Perfect. So why don't you tell everyone, take this opportunity, tell everyone what Pitbull Conference is.
Well, let me start off by saying I want to comment on a couple of points that you had brought up in your talk about being in sales. Hey, guess what? We're all in sales. The secretary at the desk is in sales. The attendant at the gas station is in sales. If you're in real estate, you're in sales. We're all selling something every day. We may be selling our personality. We may be selling a product. We may be selling a service. We may be selling something, information, knowledge, whatever. But everybody is selling, whether you realize it or not. Now, sales is not a bad word. Sales is actually a very powerful word, because what sales really means is not – here's the misconception. People think that sales means trying to persuade somebody to buy something. But that's not what sales really is. Sales means that you're making a competitive argument or a compelling argument to the other person that you're speaking to, helping them see your product and service through the same eyes that you see it. That's what sales is all about. So I just wanted to bring that up. We're in the private lending business. I run the largest organization in the country that teaches private lending, not only to mortgage brokers, but also to hard money lenders. And I don't know any segment in the whole real estate sector, whether it be title and escrow, appraisal, selling of real estate. I don't know any other sector that provides more control over your business model, more profit potential, and the ability to truly create a business model that is an annuity for yourself rather than hustle deals. Look, everybody can hustle a deal, but at the end of the year, I was talking to somebody just the other day. He said, "You know, Leonard," he said, "I made $1.5 million last year. I lived a good life, but I've got nothing to show for it." So if your business model, just think about this, Jack, if your business model is not set up to where you have multiple revenue streams based on work that you did a year ago or 2 years ago, then your business model is flawed. And that's what I like about private lending, because when you do private lending for real estate and it's set up correctly, you get paid today for work you did a year ago, 2 years ago, and 3 years ago. You know, somebody once said to me, if you want to be successful in business, come up with a great idea, run to the cash register as fast as you can get there, but stand behind the cash register rather than in front of the cash register.
That makes sense. Why don't we go into why would because I don't know if the audience realizes why someone would take a private loan, who's taking private loans, and, you know, what's the advantage of taking a private loan?
Well, in today's marketplace, and the private lending business is the second oldest industry in the world, and you can use your imagination as what the first one is.
But by the way, I'm trying to interview the people who performed the first one, but I'm so ugly and so obnoxious. They won't even call me back. They totally ignore me.
Yeah, a lot of truth to that, and I don't like the comment, but I think it's funny.
Yeah, I'm teasing you. I'm just joking around.
I am too. Let me just say that when the banks don't lend, that's a good thing for our industry as a whole. Because when the banks don't lend, our industry steps in and says, hey, you know what? Let us take a look at it. The private lending business creates commerce and creates jobs and provides a useful service to, for example, let's say, for example, I wanted to buy a commercial property. And the commercial property was $1 million, and I had $300,000 of it, but I needed an extra couple $100,000. I have basically two options if the bank says no. I can go get a partner and pay him 50% of the profit, or I can go to a private money lender, pay them 12, 13, 14%, and I own the project myself. That's a great scenario. Another great scenario is it's an opportunistic situation for a borrower. If the bank has no appetite for the loan and the private lender has an appetite, guess what? The private lender is filling a void in the marketplace. So there's a thousand different scenarios why somebody would go and get a loan from a private lender. Now, is private lending for every situation? No, of course not. Of course not. Anything that's non-owner occupied and investor rehab, fix and flip, small balance commercial, anything that has equity involved, because at the end of the day, what the lender is providing is it's a convenience loan. It's a loan that helps you facilitate a deal. That's pretty much it, in a nutshell.
Look, I agree. And, I've been a private lender for, 28, 29 years. And I used to tell people the same thing you do. You come to us because of accessibility to capital and for ease of use, where a private lender can get a deal done very quickly, usually without a lot of the aggravation, and is much cheaper than a partner. A bank takes forever. And I used to give a similar story equated to, I used to tell the story of two guys are at Thanksgiving dinner. One's a plumber, one's a doctor. The doctor's complaining. He doesn't have any time. He can't invest his money. And the plumber doesn't have any money. And the plumber says, I found this property. It's on a job, but I don't have the money to buy it. So they get together, they're brother-in-laws, and they say, the doctor says, I'll put up all the money. Let's split the profit. And next thing you know, the family's fighting, and he has half the profit. And a private money lender effectively does the same thing without the family relationships, and it's a heck of a lot cheaper than half the profit. So I get the same thing. As well, most people don't realize this. Corporate America takes private loans and more expensive loans all the time. And a perfect example of that is all these tech companies, Facebook, LinkedIn, all of these companies were started with effectively private money loans through angel investments and through some type of venture capital. So I get it.
Hey, Jack. You're singing to the choir.
I know. So we got why people would come to a private money lender. Who is your seminars best suited for? In other words, there's a lot of people listening, whether they're listening live or on the radio or playback, but who is your seminars best suited for? What type of person do you think?
There's three demographics. And by the way, our next conference is June 12th. In Fort Lauderdale at the Marriott Harbor Beach. And so I know you're based out of Miami, so if our Miami friends and South Florida friends want to attend, we're just, right up the road from Miami and Fort Lauderdale. Let me say this. There's three demographics of people who come to our event. One, the mortgage broker who's looking for credible funding sources. That's number one. Two, the hard money lender who's looking for deal flow. And three, we get a big attendance from the self-directed IRA world. Individual investors who are looking to deploy capital in the marketplace, and they're looking for deals, they're looking for opportunities, they're looking for interesting and unique situations that they can deploy utilizing their self-directed IRA and receive a reasonable dividend coupon rate on their investment. That's who comes to our event.
So, are you finding these people are making doing private money lending on a part-time basis? You know, a deal every quarter, a deal a month, or are they what I call full-time professionals, or a combination of both?
I don't know anybody. I don't know how you could do anything on a part-time basis and be good at it.
So most of these people are committed to it. This is their profession. Who come to these?
These are seasoned guys who come to our event. You know, this is not an Amway deal where you can keep your job during the day and you go out and pitch. You go out and pitch. You know, deals at night. You have to live it, breathe it, experience it. And so anybody who approaches any business, whether it be private lending or just selling real estate for that matter, I mean, you have to immerse yourself, you know, in it. So the people that come to our event are guys big players, guys that are doing 100 deals a month, 50 deals a month. Some are doing even more than that. We have guys that come to the event, lenders or investors, who will go into distressed areas and buy every property in the area. They'll go into Detroit. They'll go into areas in Indiana. They'll buy the entire neighborhood of 200 doors. And then they'll go in, they'll rehab it. Sometimes the city gives them tax breaks. And what have they done? They've revitalized the community. It's a good thing.
Walk me through what, again, if I understand it's the big guys, the pros, someone who's in the business. Is someone coming to your event who maybe is an accountant or some sort, or a lawyer who has some money, some contacts, and wants to build a portfolio of loans as sort of, I don't want to say a secondary business, but as a sideline to build it up slowly? Is that who your seminars are suited for as well, or not really?
Yes, I would say so. Look, let me tell you where the money's at in private lending, in my opinion, in my humble opinion. And I've been doing this for 35 years, so I have a pretty good idea of what's happening in the marketplace and where the emerging opportunities are. Let me take you back to 1933. 1933, the United States government created what's called the 1933 Securities Act. And that Securities Act has been in place until now. And what that basically said was that you can create a real estate fund, a mortgage pool, a private placement offering, and bring investors in, pool their money together, and then redeploy that capital into the marketplace. But you could only do that with known persons. Think about that. Only people that you know. So people that you know, and they had to be accredited investors. In 2014, the Jobs Act was put into place, which now means since 1933, we're now able to advertise our offerings. So if I'm, for example, a mortgage broker, I'm an investor, I'm a lender, I can create a real estate fund. I do the paperwork, and, you know, that's one of the things that we do in terms of our private consulting business, but I'm not here to talk about that. I'm just talking about the situation as a whole. I can bring investors into the fund by advertising in the Wall Street Journal, on our website, on a radio program, anywhere and everywhere, and I can advertise that opportunity and bring investors into the fund. I have to be accredited. That part hasn't changed, but the scope of who we can speak to has changed dramatically. So think about this. I now bring investors into the fund. How do I make money? I'm going to use the investor capital to deploy into the marketplace. For that, the investor is going to receive a conservative dividend yield, which is secured by a first deed of trust of real estate that has been underwritten professionally and conservatively. So the investor is in a very safe position. Now, let's say, for example, I'm paying my investors a target rate of 10%. And let's say I'm loaning out at 13%. That 3% arbitrage spread goes to me. The origination points go to me. The management and service fees that you charge the fund goes to me. So what happens is that you create a business platform that has multiple revenue streams, and you get paid today for work you did a year ago, 2 years ago, and 3 years ago. So the more capital that you bring into the fund, the more you get. So if you have a $30 or $40 million fund and you're charging the fund 1.5 for management fees and 1.5 for service fees, you're getting 3 points off the top of your $30 million just for the management of the fund and the servicing of the fund. It's the exact same business model that Warren Buffett uses, only Warren Buffett uses the equities markets. We're using the real estate market.
Len, I got a break I don't mean to interrupt you. I got a break for a commercial, and hoping you'll stick around for another segment. When we get back, I want to talk about some of the downsides. Because, look, there's always downsides. Deals always go bad. Trust me, I've had more deals go bad than you could shake a stick at. And what investors can do to protect themselves being a private money lender. So hang around, everyone, and we'll be back in 2-3 minutes. Len, you'll stick around?
I'll stick around.
Okay, thank you. Folks, we'll see you in a minute or two, or listen to you, hear you in a minute or two.
Don't turn that dial. We'll be right back.
Did you invest in a non-liquid real estate partnership? Do you want and need liquidity? There's finally an answer. Quick Liquidity is a direct buyer of real estate minority interest and tenants in common investments across the country. To find out if we would buy your non-liquid investment, call us at 561-221-0881 or visit us at quickliquidity.com. That's quickliquidity.com.
Are you tired of dealing with invasive and unreliable banks or brokers who charge large amounts of upfront fees and never deliver on their promises? Gelt Financial Corporation, in business since 1989, offers a stated income mortgage loan for non-owner occupied residential and commercial real estate investors for purchases, refinances, and yes, cash out refinances. Call Gelt Financial at 561-221-0900. That's 561-221-0900. Our stated income loan program does not require tax returns. Due to the light documentation, we can offer quick closings and approvals usually within 1 day. This program is a 30-year term with no balloon payment, with loans amounts from $100,000 all the way up to $5 million. Call Gelt at 561-221-0900 or visit us at geltfinancial.com.
Does your company need financing to help with cash flow? Gelt Financial Corporation has been in business since 1989, knows the financing that businesses need to succeed in today's competitive environment. Gelt offers a wide array of programs such as accounts receivable, factoring, asset-based lines of credit, commercial real estate purchase and refinance financing, and bridge loans. Call us right now at 561-221-0900 to learn if you qualify. Gelt Financial understands that every business is in a unique situation which requires a unique solution. We pride ourselves in thinking outside the box to secure even the most difficult financing. Call us right now at 561-221-0900 or visit us at geltfinancial.com. That's geltfinancial.com. And now, 880 The Biz Traffic.
Big delays on 95 South this morning from the Golden Glades on down, especially in the local lanes. But everybody heavy as you approach the 112 Airport Expressway and staying jammed through the Dolphin, where we have the right lane blocked by the remains of an earlier crash. The right shoulder also blocked as well. Southbound Palmetto, you got a crash on the entrance ramp from 67th Ludlam Road. And then as you go around the bend, you're going to be heavy past I-75, northbound jam from the Shula to the Dolphin. On the Shula southbound, just before the Turnpike, a crash over on the right side. Northbound heavy coming off the Turnpike until Killian. For more traffic, follow us on Twitter at Total Traffic, MIA.
This is the Wall Street Business Network.
South Florida's only business radio station, 880 AM, The Biz. Welcome back to It's Down to Business with Jack Miller.
Hey, everyone. Welcome back to our radio show, our humble abode here. I want to remind everyone the dial-in number is 305-541-2350. I'm joined today by my lovely, curvaceous, sexy producer, Wanda, who's wearing a Mr. Bubbles shirt.
Who are you talking about?
Oh, I'm talking about you, baby. I love that Mr. Bubbles shirt. It's kind of exciting.
I have to look around, checking who's in the room.
No. Only you. Hi, hon, I love you. Don't forget about me.
Yes, he does.
I do. Anyway, Len, you back with us?
Oh, I never left, my friend.
Okay, good. Anyway, I want to get into, let's talk about, look, there's a lot of upside in private lending. I've spent my career on it. We only have a few minutes. I don't want to talk about the upside because there's huge upside. Let's talk how an investor gets in and how he prevents loss or downside. Because in everything, if it works out, it's always great. So let's talk about how, if I'm an investor, I have money, a couple $100,000 in my retirement account, I want to retire, I'm looking for a career, a second career, how do I protect that downside? And I want to talk about loan to value, types of deals we should be doing and should not be doing, documentation, things like that if we could.
Well, first of all, it's important to understand that you can limit your downside in any kind of transaction. I refer to it as mitigating the downside, but you can never 100% protect your downside in any situation, whether it be buying equities, real estate transaction. That's life. That's the way it works. I mean, that is the way it works. So I train jiu-jitsu, and I can be with somebody that I have basically have my way with in a match or in a jiu-jitsu fight, but guess what? Sometimes he catches you. That's just kind of the way it works. And not every deal is going to be perfect. But let me tell you what the key is. You have to do your homework referring to doing due diligence in terms of the real estate investment and who you're doing business with. Ask, if you're going to be deploying capital, for example, with a fund manager, ask to speak to a dozen of his investors that are not relative. Ask to take a look at the valuations and his underwriting guidelines. If you're going to be investing yourself and you're a novice, I would suggest letting the pros do it and deploying capital into a fund. If you have some experience, remember one thing, that valuation and underwriting the loan is the key. We go back to 2008, Jack. 2008, the real estate implosion. Why did that happen? Because lenders were lending capital out at 80 and 85% loan to value. The market goes down 30, 35, in some markets 40%, and it left them sitting and having a loss on their books. If you lend out at 50, 55, 60% loan-to-value ratio, and you determine that the distressed value of that property, for example, if I buy a property for $100, how much is that property going to be worth if I had to sell it 30 days from now? It may only be worth $80. So I have to value that property at the distressed value, not at the appraisal value. So valuation and underwriting are always the key. That's the key to our industry.
I agree. I learned the hard way. Valuation, you can make poor judgments in a lot of areas, but if you have a good value, it'll solve a lot of everything. By the way, just
look, Jack, even if the deal goes upside down or sideways, the borrower does not perform on the loan, and you're lending at conservative loan-to-value ratios, and your valuation for the property has been determined in a very conservative manner, you end up with a windfall if the deal goes upside down. So just because you take the property back doesn't mean that it's going to be a loss. It just means that you're going to have more holding time and you're going to have to service the debt a little bit longer. But many times, if you're underwriting the property properly, you end up with a windfall at the end. Boom!
I hear you. Well, look, I know we're not talking about it, but I know some of the other critical things are appraisals, title reports, assignment of mortgages, confession of judgments, things like that. And the devil's always in the details, and those details get you every time. Where do you think some of the big mistakes that some of your past clients, because look, if you have seminars or if you do anything, there's some who are going to succeed, some who aren't going to do it, and some who aren't going to do good. What can you tell our listeners about some of the mistakes that some of the people have made to avoid them?
No, Jack, that's a black belt question, and I'm going to give you a black belt answer to that. The mistakes that I've seen that were made were overly aggressive investors. Because when an investor looks at a property, think about this. A novice investor, even an investor who's even sophisticated, there's only one thing they're looking at. They're looking at their profit potential. But remember, there's three things that can happen in a deal. The best case scenario, the most likely case scenario, and the worst case scenario. And investors have a tendency to always look at the most likely case scenario. But in reality, most deals fall in the most likely case rather than the best case, somewhere between worst case and most likely. If you expected to make $100,000 on the deal, after everything's said and done, maybe you ended up netting $68,400. That's the most likely case. If everything went perfect and the moon was aligned and everything was perfect, you make 100. But if you make a couple mistakes, and you brought up a good point, title and escrow, let's get real. I mean, you have to have a title and escrow company make sure that you're getting legal title to the property, obviously. Appraisals, I use appraisals as a very broad stroke guideline as to what that property is worth. I would do my own appraisals, my own comps. I want to take a look at how long the properties in the subject area in the marketplace have been on the market. How long did it take to sell? What did they sell it for? Were they conventional loans? Were they hard money loans? How were the properties in the subject area financed? So, yeah, I mean, the money's always made in the details. I believe, Jack, that that the way business is being run today, they run it as B2B, business to business. But let me tell you what really is happening. What's really the successful guys is they're operating their business on H2H, and that's human to human. You invest with people that you like, and you invest with people that you trust. If you don't like them and trust them, you gotta move on.
Len, so I just want to be clear because we have to go soon. You're at the conference in Fort Lauderdale yourself, so if people come in, they're going to have a chance not to talk to someone else. You're going to be there yourself, and they can talk to you and learn from your years of experience?
I'll be speaking for 2.5 hours in the morning, an hour and a half in the afternoon, and if they say that they came to the event because Jack sent them, I'm going to make sure they have a special gift from me, and I'm going to spend special time with them.
Special time. I like that. Len, give out your web address one more time, if you would.
Pitbullconference.com.
Len,
Pitbull like the dog, conference.com.
And email Len if you have any questions. He is literally one of the nation's foremost experts on private lending and also an expert on jiu-jitsu. How do you pronounce it?
Well, we're not going to say an expert on jiu-jitsu because I know one of my professors is listening to this program, and he's probably laughing right now, my friend Andre. And Andre, I know you're listening, but just remember the baseball choke that I'm working on. Anyway, putting that aside, I'm not an expert in jiu-jitsu. I'm a practitioner. I did win the world championship 2 years ago when I was a blue belt. But look, when it comes to private lending, I'm the man. And that's just a fact. I don't say that boldly. I say that confidently. And I want your listeners to come to the event, look me up, and I'll take good care of them.
Len, thank you very much.